Hello everyone, I am Jackie. This is the first episode of Great Speech produced by Coin Academy. We are honored to have Mr. Chris Lee with us. Let's talk about some regulatory interpretations of Hong Kong crypto and some hot topics of the next bull market. Let's first have Chris introduce himself and say hello to everyone.
Hi everyone, I'm Chris Lee. I entered this industry in 2016. Prior to that, I had worked in traditional finance, serving as the CFO of a listed company and also as the CEO of the platform for 1 year. Then I moved to Huobi as the CFO, General Manager of Corporate Secretaries and International Business VP. In 2020, I left Huobi and founded my own company, TKX, Trust Knowledge Execution, for first-party market investment. As a result, I am relatively familiar with the legal aspects of compliance with the Securities Regulatory Commission, SFC Research Institute. This is why I also discussed this topic with Jackie. Later, we found that we have many common friends who are all major figures. So it's a great honor to be here and communicate with you all here.
We know that next week Hong Kong is set to implement regulatory policies. From your perspective, does this involve any specific beneficial policies? Or, looking further ahead, does the currently popular Hong Kong concept have sustainable momentum? How do you observe this?
So I think there are a few key points. Firstly, from June 1st, retail investors will be able to start trading. I think everyone has pretty much digested this news and is now taking action ahead of time. For retail investors, one of the most important things to solve is the issue of cash infusion and outflow. So, at least from a general atmosphere perspective, this is a very significant help. And there's another aspect that's related to the entire policy. The policy recognizes cryptocurrency as an alternative asset and also legitimates the industry. Web3 is a brand new industry that has strategic significance for the country and competitive advantages. Therefore, it was launched as a test ground in Hong Kong. From an architectural perspective, the entire compliance architecture is overlaid on the existing broker-dealer licenses, such as the number 1, No. 4, and No. 9 licenses. Currently, VSP, which is actually an exchange license, has been added to the NUM 172 license, which adds security tokens, security coins, and asset tokens to VSP. The third point is that I think I see that at least in the aspect of RMB input, it is gradually becoming easier, including the fact that we see Suning Bank is starting to have some arrangements for personal RMB input. However, I think this is still quite early. Then what we just discussed, including our Chinese concept coins or Hong Kong concept coins, I feel there are too many uncertainties. Someone also said that they may issue RMB stable coins through the Conflux platform. However, I believe the biggest challenge is that it will require bank cooperation to issue stable coins. I think this is the biggest challenge, so for the time being, I don't see it happening really. RMB is the central bank's currency. However, this is different from our independent and publicly traded coin, which we call the stable coin. If there are any domestic projects that claim to benefit from Hong Kong's compliance requirements or something like that, I think we need time to verify it. At least from my perspective, there are still some areas that need to be improved in the banking sector. Then you said regarding projects, would they receive favor? I think for overall compliance in Hong Kong, it's actually CFI that takes the lead. I looked it up yesterday and noticed that the explanations regarding some policies mainly focus on the major coins. I think it's because they want to test the water first before allowing a variety of tokens to be launched. Therefore, there will definitely be a few big ones that see significant trading volume and high valuations. Then everyone has a stronger sense of identity and won't fall apart. Overall, the entire industry in China, especially in Greater China, thinks short-term. This short-term thinking is actually not good because everyone wants to make a few bucks and leave, or they think there's a risk, which affects their long-term investment. However, I think now, at least in terms of atmosphere and resources, we can make up for this. I think Hong Kong is more suitable for this. Then in terms of personnel and technology, I believe that Hong Kong is lacking in terms of personnel, but our motherland can serve as a major base. We have so many excellent talents in major companies, You can place the team in places like Beijing, Shanghai, Shenzhen, Chengdu, and I think it's still quite good. Overall, as for whether the Hong Kong concept will continue in the next bull market or not, I think as long as it's a bull market, any concept can continue.